Hi, I'm Aaron Bovos, and I'm pleased to serve as the Chief Financial Officer, Treasurer, and Chief Operating Officer of our American Quarter Horse Association. This year, the leadership team made the wise decision to cancel the 2020 convention. As a result, I'd like to take this opportunity to share with you some financial highlights from fiscal year 2019. As a reminder, our fiscal year runs from October 1st through September 30th of the calendar year. Thus, we'll be covering financial information through September 30th, 2019. We'll cover some highlights and accomplishments from the year, provide a recap of financial performance and where we are with our goals, and talk about what we're working on this year to make our association even better. Before we get started, I'd like to take this opportunity to thank the members of the AQHA Executive Committee and the Investment Oversight Council for their support during this past year. In just a moment, we'll talk about our accomplishments, none of which would have been possible without their governance and commitment to AQHA. Their insight, leadership, and passion for our breed and the success of our association is unwavering. When I arrived at the association in November of 2018, we began a journey together. A journey to improve financial transparency, replenish reserves, and to provide a framework for which accurate financial data could be used in the management of day-to-day operations. While we've made great strides, we still have some things to accomplish as we continue on our journey. What we did accomplish is worthy of sharing. With a goal to replenish reserves, we began making contributions to our long-term investment portfolio in fiscal year 2019. This contribution reversed a multi-year trend where we were withdrawing investments to cover the cost of operations. I'll show you how we are progressing on this goal in a few slides. Our accounting systems have been transitioned to track and report data on both a modified accrual and the accrual basis, providing us with the ability to see exactly where cash is being receipted and expended. Weaver & Tidwell, our new accounting firm, completed a comprehensive fiscal and operational review this year. Through support from our governing bodies and our staff, our new audit firm has been able to provide us an objective review based upon their professional knowledge. Through the recent audits, we have been able to discover several policies and procedures that we need to improve upon. We have begun to implement some of these updated procedures and will continue to do so to ensure we abide by best practices for our members worldwide. The adoption of policies and procedures allows us to maintain a consistent vision for fiscal activities and operations. The act of documenting these concepts and defining responsibilities provides a level of accountability that allows us to continuously understand our financial goals. In 2003, our past leadership made the wise decision to close the defined benefit pension plan to new entrants. On January 1, 2020, we closed the employee defined benefit pension to additional benefit accruals, and all employees were transitioned to a traditional 401k program. The financial impact of the defined benefit plan will be discussed as we review financial statements in a few slides. Each week, we publish an internal report on our cash position, which includes an overview of bank account balances, short-term investments, receivables, and payables. The old adage, what gets tracked and reported gets improved, is absolutely true. Week over week and month over month, our key indicators are improving. And finally, we implemented the ability to track and report revenues and expenses at activity levels within departments. With this framework now in place, we'll have the ability to truly know how much it costs to run a world show or complete a transfer of ownership. So let's talk about financial performance. The association's assets totaled $39.8 million for the year ending September 30, 2019. We have a few significant items that we'll be discussing today, and each of these had an impact on how we ended the year. Intercompany receivables is down between fiscal year 2018 and fiscal year 2019 by $1.5 million. As you may know, the company Rob and Glenn Pedigrees has played a vital role to reporting statistics in our industry for many years. When AQHA acquired this company, Rob and Glenn Pedigrees was managed as a wholly owned subsidiary. However, in fiscal year 2019, the entity was dissolved and is now a department of AQHA. As a result, several financial transactions ensued, which included eliminating any intercompany activity between the two businesses. Another significant change in assets in fiscal year 2019 relates to the investment in subsidiaries. As required under accounting standards, we had to change the way we were valuing wholly owned subsidiary companies. This impacted both Rob and Glenn Pedigrees, as discussed on the previous slide, and the official trophy company of the association, Award Recognition Concepts, also referred to as ARC. I'd like to illustrate this change by using the analogy of any one of us purchasing a share of stock. If we bought a share of stock for $100, the value of that share changes with the market. We may be able to sell that share for $120 if the value of the company rises. But if the value of the company falls, the value of the stock falls. In fiscal year 2019, the value of the companies AQHA owned decreased by just over $3 million due to their operational and financial performance. Investments exceeded $20.8 million for the year. This increase shows our commitment to build reserves. With the contribution made in fiscal year 2019, coupled with the contributions planned in fiscal year 2020 and beyond, we plan to make incremental strides in reestablishing a year's worth of reserves for the association. This goal represents AQHA's commitment to fiscal health and strength and will return us to an entity that has ensured our operations will continue for years to come. Liabilities for the year totaled $30.8 million, mainly comprised of deferred income. Deferred income includes such items as multi-year membership or a life membership, where a portion of that revenue must be realized in a future year and is not earned in the year cash was received. The next largest category of liabilities relates to the pension plan. Our liability increased $6.4 million from the prior year based upon our actuary's report. While this is significant and worthy of discussion, a piece of this liability is based upon the market valuation of the assets held in trust to pay the accrued liabilities. Each year, the portfolio of assets within the pension trust are valued on October 1st. That value is then compared to the accrued benefits, and a resulting asset or liability is recorded on our books. The Executive Committee and Investment Oversight Committee have adopted a multi-step plan to assist in managing this liability. The first step was taken this year, and that was to close the plan to new benefit accruals. Eventually, under the IRS guidelines, we'll consider the possibility of buying out employees from their benefits to eliminate this liability in its entirety. Moving on to revenue and other support, the association recorded just over $44 million in revenue. This revenue comes from all of our activities and programs, including a new registration or a transfer of ownership, our championship shows, the Professional Horseman Program, or the Ranching Heritage Breeder Program, just to name a few. As we focus on our financial health today and in the future, our priorities are to streamline the operations such that fees or charges may be maintained while the cost to provide services is decreased. Total expenses for the year were just over $45.1 million, again covering all activities and programs. In fiscal year 2019, we did record a liability for accumulated leave balances, such as employee vacation or sick leave, that had not been previously recorded, but will be going forward as a part of our updated and comprehensive policies and procedures. For fiscal year 2019, it accounted for an additional $500,000 being expensed as compared to prior years. So our net assets had a significant change this year, moving from $16.4 million to $8.9 million, with the most significant change the pension liability. Our write-down on subsidiary companies, accompanied by one-time adjustments, such as the recording of accumulated leave balances, reflect the reasons for the remaining changes. So what's ahead on our journey? We have a long list, but want to share a few of the highlights that we'll be working on. The continued cleanup of our balance sheet, including full ongoing reconciliation of asset and liability accounts, is in order. The development of financial models for each program and activity within the association will drive the ability to have data needed to make business decisions. Are our championship shows breaking even? Does a $20 fee for a transfer cover the cost of performing the service for our members? We're not completing this analysis to raise costs, rather to determine where our time should be spent to drive the most significant return on investment from operational improvements. We are pleased to be able to start publishing monthly financial reports for the AQHA Board of Directors as we continue to maintain a vision of open, transparency, and accountability. This new process will provide key financial data in a more routine and timely manner. The improvement of day-to-day operations, including documenting activities, processes, and procedures, will allow us to become even more effective as we continue. And finally, we'll make improvements to internal controls and work through the recommendations of the external auditors. As each day passes and we move another step forward in the journey, our operations improve and our ability to have financial-based data to drive the operations and decisions gets better. The work we are able to accomplish is only possible because of each of you, our members. Thank you for allowing me to share this update from the American Quarter Horse Association with each of you. If you would like to find out more about our goals, activities, or our financial performance, please connect with us by email at finance@aqha.org. Thank you.